All right, so gold and silver prices are on the front foot today after a period of suffering, particularly gold, not so much silver, with some downward momentum. Now, silver did come down after the controversy with the silver squeeze, but both assets are back up today. And I want to talk about a little bit about my market view from the macro lens to talk about what we're kind of seeing today, not only with gold and silver, but also with just the market in general. But let's take a look at gold relative to its moving averages, the 50-day, which is there in the blue line, the 100-day in the green line, and the 200-day in the yellow line. Now, as you can see, gold prices aren't really doing too well, and silver prices, on the other hand, are doing a little bit better. As you can see, silver prices on this year chart have actually crossed above the 50 days, actually crossed above the 100-day, and we're starting to see prices slowly edge up. This is likely in anticipation of the Biden administration and the positive momentum that will likely underlie price action with silver. Gold, on the other hand, had its run. What will likely be a benefit to it will be incoming inflation, especially monetary inflation, which will come through the stimulus checks that will be passed. Now, the Senate signals bipartisan support for more targeted $1,400 stimulus checks. So the Senate, as you can see here, voted 99-1 to bar upper income taxpayers from receiving next stimulus checks. So this is pretty interesting to see here. The Senate signaled overwhelming support on Thursday for limiting wealthy Americans from receiving a third stimulus check in the latest corona. Man, I said it. I probably shouldn't say it on YouTube again. But you know what this is, relief package. Now, the chamber voted 99-1 on an amendment proposed by Senator Joe Manchin and Susan Collins, barring upper income taxpayers from eligibility for direct cash payments. So this is one thing that a lot of, especially people on the right side of the aisle, were concerned about. You heard Mitch McConnell say things like, we don't want the Democrats' wealthy friends to get money. So overall, Biden has been known to be a deal maker when it comes to working with Republicans within the Senate. So if this is something that will help to get the ball rolling, I wouldn't be surprised if it does. And the overall price tag will likely still remain. Joe Biden has said that he doesn't want to come down too far from that $2 trillion mark. As you can see here, President Biden, who has maintained that nearly $2 trillion emergency aid package needs to include direct payments worth $1,400, has indicated that he's open to limiting eligibility for the money in hopes of securing some GOP support. So as you can see, he's holding on to that $2 trillion number, which is important, which will help lift gold prices and also will help lift silver prices. Now, let's talk about the overall momentum within the market. So in the past few days, we've seen, or actually, let me go back to a monthly view. So we're starting to get back up here when it comes to the US 10-year Treasury note yield. Within much of January and leading into the end of January, the yield was actually retreating a little bit. Now it's coming back up after we kind of got out of this GameStop, Reddit, Wall Street Bets fiasco that we saw. Now, one of the interesting things about this is hedge funds were really hammered last week, and one of the big ones was Melvin Capital. Now, one of the things that you might have noticed during that time was that the S&P 500 dropped significantly. And so did a lot of these big named, much loved stocks such as Amazon and others. They came down, pretty well And then they start to jump back up. Obviously, Amazon and Google had their earnings, so they skyrocketed. But other, names that people love start to come down. And one of the reasons why that I've heard posited was because many of these hedge funds who had to cover their shorts, they also had to raise cash by selling a lot of their longs. So some of these longs obviously are heavily weighted within the S&P 500. One of the reasons why we saw the S&P come down so much. But after all of this, GameStop and Reddit fiasco ended, we started to see a bit more of a recovery here and much more positive momentum after we came out of that controversy. So now we're back above 1.158 currently in the U.S. Treasury note yield. The VIX start to come down, and as we know, with the VIX, when it rises, so too does the DXY. But now the DXY has started to come back down. It looks like it's approaching. The 90 region again. As you can see here, it's started to rise even more, and now it's starting to come back down. So things are looking pretty good today on Friday for not just gold, but also some other stocks that people have been eyeing. For example, on this channel, I've talked a lot about SCCO, and it started to struggle, almost kind of moving in line in the same direction as the US 10-year Treasury yield. Start to come down towards the end of January and start to rise this week. Take a look at the US 10-year Treasury yield, same kind of path. So some stocks are actually kind of matching the movements of the 10-year, which is pretty interesting, which also parallels investor sentiment. So overall, it seems that large institutions, governments as well, pension funds, others are becoming a little bit more positive within the last day or so as far as their market view. Now, that is a good thing for silver, and eventually it will be a good thing for gold once we get this stimulus check passed. So guys, let me know what you think about all of this happening within the markets in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.